Our economy is changing in 2025, possibly drastically, and I want to show you how you can find the investment opportunities that most people are overlooking. President Trump plans to implement significant changes to government and economic policy. This video won't focus on politics. There are already plenty of people doing that. Instead, I'll demonstrate how the current changes will create a unique investment opportunity. The U.S. economy, measured by GDP, gross domestic product, was approximately $28 trillion in 2024. GDP, which tracks all spending within the economy, is a key indicator for investors. Savvy investors aim to invest in sectors that are poised for growth, as this is where they will see the highest returns. Most people understand that, but what many people don't realize is that the largest spender in our economy is not you and me. It's not even corporations. It's the government. So when you have a new president that comes in with new economic policies, that changes how money moves. Right now, when a president like Trump comes in and wants to make big changes, like sending lots of illegal immigrants out of the country, putting extra taxes on things from Canada and Mexico, or giving people big tax cuts, some people are going to make money from it. Want to know a little secret? Big investors on Wall Street always find a way to make money, no matter who the president is. They do this by paying close attention to how the economy is changing. But most regular people have no clue how to do that. That's what I'm going to show you in this video, so make sure you stick around until the end. Before we start, I want to make sure we're on the same page. Some of these topics might not feel great to talk about, but if you want to be a smart investor, every investment you make should follow 3 simple rules. Number 1, it has to be legal. Number 2, it should make sense financially, meaning you should have a good chance of making money. And number 3, it has to feel right to you morally. That last one is up to you. I won't tell you what's right or wrong to invest in because everyone has their own beliefs. For me, there are certain things I just won't invest in, and you'll have to decide that for yourself too. My goal is to show you what's happening and help you understand where the money is moving. This way, you can make your own choices based on these 3 tenets, because everyone has different beliefs about what's right or wrong to invest in. President Trump has talked about 7 big ideas. 1, sending many illegal immigrants back to their home countries. 2, adding extra taxes on many countries. 3, spending more money on military. 4, making rules for financial companies less strict. 5, spending money on exploring space. 6, making rules for oil and gas companies less strict. And 7, giving big tax cuts to people. Now, I want to go over each of these and explain how money will move if these ideas happen. I'll also show you how these changes could create special chances for you to invest and make money. Before we start, remember 2 things. 1, investing is risky. You might lose money at some point. No one can promise that you will always make money, so always do your own research and never just trust anyone online. 2, if you're a passive investor, someone who doesn't want to get too involved, you don't need to worry about what happens at the White House. If you're just putting your money into something like the S&P 500, just remember, ABB, always be buying. You buy when the market is doing well, and you buy when it's doing poorly. We'll have another recession or market crash at some point, but no one knows when. The way to win as a passive investor is to keep buying and let the market do its thing. But if you want to be more active in your investments and find new opportunities, not just trades, then this video is for you. It's important to understand that this approach comes with more risk, but also the potential for higher returns. However, it will require you to be more actively involved in your investments. While we can discuss the possible outcomes here, a recession could cause everything to go down, so you need to be prepared for that. Being a smart investor means recognizing that just because there are changes happening, it doesn't guarantee that stocks will rise. The stock market is influenced by many different factors. For example, it's no surprise that Trump has talked about mass deportations, but did you know that the private prisons could benefit from this? Here's what NBC News said. Private prison stocks soared after President-elect Donald Trump promised that there would be mass deportations. And if you're wondering why private prison companies like this idea, Investor Business Daily explains, CoreCivic, a private prison company, received a key upgrade on forecasts of increased need for Immigration and Customs, or ICE, detention beds under incoming President Donald Trump. This is a reminder. You have to decide what aligns with your own moral compass. My role in this video is to explain the financial side of these changes, because the economy will likely experience a lot of shifts as Trump's plans unfold, but you must understand what makes a sound investment decision. Let's move on to number 2, tariffs. How might they create an investment opportunity? A tariff is basically a tax. So if companies like Reebok, Ford, or Target are buying products from China, there could be an extra 10% tax on those items to bring them into the United States. For example, if Reebok buys something from China, the price could go up by 10% because of the tax or tariff. This could mean a few things for Reebok. They might raise the price of their products by 10% to cover the extra cost. They might lower their profits to absorb the cost. They might move their manufacturing to the US or another country to avoid the tax. Which one do you think they'd do? It's hard to say exactly what will happen because this is just proposals and early in the game, and we don't actually know what all will end up being passed. However, if manufacturing does return to the US, certain industries could benefit. For example, if more factories are built in the US, real estate companies might benefit. Railroads could also profit because they would need to transport products between plants in the US. The CEO of CSX, a railroad company, said, "As long as goods are coming to the United States, we'll transport them somewhere. If tariffs change the trade flow and the economy grows, we'll be part of it." So, if tariffs lead companies to bring manufacturing back to the US, it could help companies like railroads that would need to move products between factories. We don't know for sure what will happen until it actually happens, but it's important to think about how these decisions could move money and create new investment opportunities. Let's talk about number 3, investing in the military. During his campaign, Trump mentioned wanting to invest more in the US military, but remember, the military needs products that are made by companies. Here's how it works. If the government spends more on the military, it means more people will be practicing shooting guns, more bullets will be used, more people will be driving tanks, more people will be flying fighter jets. None of these things are made by the government itself. They are made by companies. So the government spending could go to these companies that produce military products. If we look at some of the top defense companies in the world, many of them are based in the US. If the government invests more in the military, it could lead to bigger contracts for these companies. The biggest defense company in the world is Lockheed Martin, a US company that also sells stocks. They could potentially get some of these contracts, but we don't know for sure. We don't know what will be passed or which companies will benefit, and there's always the risk that a company might mismanage its funds. This is why doing financial research is so important. My goal in this video is to show you how the money could shift around based on Trump's proposals. Now let's move on to number 4, which is related to finance. Trump has talked about making changes to reduce rules and regulations in the financial services industry, which means loosening regulations on Wall Street. Regulations are rules that make it harder for businesses to operate, but they are there to protect consumers. Trump has suggested rolling back some of these rules to make it easier for banks, investment firms, and hedge funds to work. Some people worry this could lead to a financial bubble. That's why it's important to learn about finance so you can be prepared for whatever happens. Here's a quote from S&P Global. Investors rushed to buy bank stocks after Donald Trump won the 2024 election. The market expects fewer rules starting in 2025, including more support for mergers and acquisitions. This means many investors are hoping that the government will reduce some financial rules, which could help Wall Street firms, banks, and investment institutions make more money. But we won't know for sure what will happen until it actually does. This is why you need to think carefully. If regulations are reduced, what would that mean? It could make it easier for investment institutions to operate and increase their profits. Now, let's talk about number 5, investing in space exploration. One way to understand this is by looking at what Trump did during his first term when he created the Space Force to focus on space and space exploration. Based on what he said recently, many people believe that Trump will keep investing in space exploration and the companies involved in the industry. In fact, let me share what CNBC reported after Trump won the election about space exploration. Right after the election, several companies in the space industry saw their stock prices go up. Just that week, Rocket Lab went up 40%, Intuitive Machines went up 28%, Spire Global went up 26%. Now, I hope you can see why I always try to be careful with what I say, because there's a lot of guessing here. We don't know exactly what will happen or how much will be passed, but many investors are excited about the idea of space exploration. So if space exploration interests you, it might be worth keeping an eye on as a possible investment opportunity. Let's move on to number 6, deregulating oil and gas. Trump has talked a lot about changing the energy industry in the United States, especially when it comes to oil and gas. His ideas include increasing exports of liquefied natural gas and leasing more federal land for drilling. People in the oil and gas industry are mostly in favor of these changes because deregulation makes it easier for their businesses to operate. Let me share something from the Wall Street Journal. They talked about Trump's choice for Energy Secretary Chris Wright, who's a CEO of a fracking company. Wright says that global warming has created some positive changes for the oil industry, even though some big oil companies disagree with him. What does this mean? It looks like these changes might not be good for renewable energy sources, but they could help companies in oil and gas. Now remember, my goal in this video is not to tell you what to believe, but to help you to understand what's happening so you can make smarter investment choices based on the things that are actually happening. Now let's talk about how tax cuts can affect your investments. We don't know exactly what Trump's tax plans will be, but we do know he's talked about cutting them. According to the Center on Budget and Policy Priorities, big tax cuts usually lead to more stock buybacks. A stock buyback is when a company buys back its own stock to reduce the amount available, which can make the stock price go up. In simple terms, companies do stock buybacks to try to make their stock more valuable. Stock buybacks aren't necessarily good for the company or the economy, but they can help investors because they can push the stock price up in the short term. It's similar to a dividend, where a company gives money to shareholders. But stock buybacks don't create real value for the company. There are risks to stock buybacks, though. For example, in 2019, Delta Airlines did a huge stock buyback, spending billions to buy its own stock. But when the pandemic hit in 2020, they didn't have enough money and had to ask for a bailout from the government. So even though we don't know for sure what will happen with tax cuts, if they happen, it could lead to more stock buybacks, which could give companies a short-term boost. That's why it's so important to be financially educated. A lot of people make decisions based on emotions instead of understanding how the economy works. The reality is, our economic system tends to favor investors. Whether you like it or not, it's important to understand so you can find the opportunities to build wealth. All of these things come with risks. We don't know what will happen in the next few years, and even if some of these changes happen, we could still face a recession that causes the market to drop. That's why I suggest becoming a smart and strategic investor. If you're not someone who can handle the stress of a market crash or recession, don't worry about all the details. Focus on the basic principle. ABB, always be buying. Find a broad investment fund, like one that tracks the total stock market, the S&P 500 or the Dow Jones. Once you've chosen, just keep buying regularly, whether that's weekly, bi-weekly, or monthly. If you stick to this strategy for 10, 20, 30 years, you'll build wealth. Historically, the stock market has grown about 10% per year over the last 100 years. Does that mean the market will always go up? No. We've had about 16 recessions over the past century, But many people wrongly assume the market will just keep going up forever, and that can be dangerous because downturns will happen. When a downturn comes, many people will panic, but I want you to be ready to find opportunities. That requires understanding your strategy. If your strategy is ABB, stick to it. If you want to be more involved, you can track where money is moving and look for the special opportunities regardless of what the political landscape is. Follow the money. This approach carries more risk, but it can also lead to bigger rewards. Your research and financial knowledge will be really important in making it work. And I hope that I can help you with increasing some of that education here at Money Matters Academy.